Alright. Welcome back to a new banger here. This is Blue Mark FX Pips. Hereby we drop knowledge based on the recent market direction. So guys, today I'm gonna do a trade recap that we took with my guys in the group. I shared the setup there in WhatsApp group. So basically, huh. As you can see, gold has dropped for more than 6,000 pips in a single daily candle. As you can see, it's more of 6,000 pips in a single daily candle. So I'm anticipating that gold, if possibly by next week, the price might react at this point here, pumping to the upwards. Gold crashed yesterday due to unknown reason, but as per now, I think maybe it's because Trump tends to change the head of the Federal Reserve. I don't know, power thing. So I don't know, but it was kind of manipulation, though it was not part of the news. Yesterday was just a crazy day for those who were in buys in this pair. So let me guys write here my strategy that I always use in trading gold and also other pairs, basically like the Euro USD, GP USD, or the other pairs, the minor pairs. But me, mainly I do focus on gold as my major pair. So let's kick into today's content. Alright, so we'll start with the strategy that I use. I use advanced SMC plus MSR. So basically, to those who don't know what MSR means, these are the Malaysian support and resistance. You understand, guys? Yeah, it's basically the Malaysian support and resistance. So it basically involves the breakout structure, involves the liquidity, involves the key levels like the support and resistance, and also it involves the fair value gap, the FVG. Yeah, and maybe the order flow or maybe the order block. Though order flow, it simply means it's a combination of the order block and the fair value gap. So it's basically the order block. Sorry guys. So it's basically the order block. So when I do take a trade, these are the things that I usually keep keen on before I do take an entry based on the model or the strategy that I personally use. There was some guy in my group used to say that I don't know. He used to say that he's actually trading SMC, but he doesn't really know much about it. But he keeps losing. But today I'm gonna nullify this strategy down so that you can be able to understand the key basic points that you need to know in order to place a trade. Alright guys, I've been trading for more than 4 years now, so this is my 4th year, and I started becoming profitable at I think it was late 2025 at December or maybe early January there. That was when I saw the consistency in the work that I've been doing. So let's dive into today's work. As you can see, gold has been popping down for more than 7,000 pips. It has lost. Actually, I was anticipating for gold to crash because at either 5,400 level here, or maybe if it goes up, this may be the liquidity. But this this retracement, this is just a basic liquidity catch, or maybe the liquidity grab in the market. So after yesterday, when gold dropped with the one huge candle, you can see from here up to here. So this was basically 405 pips here. It lost about 405 pips, and most of the traders yesterday blew a lot of accounts. I personally didn't trade yesterday because I had some personal errands to attend to. So it removed a lot of guys from this zone here towards the downside. Yeah. So as you know, gold usually have one move, or maybe usually moves in one sequence, or maybe the pattern. When gold drops, I usually call it crash. When gold crashes and it leaves the price action with a wick like this one, it simply means that the price tends to change direction and fill in the pending orders that the large institution have left behind to be filled. So first of all, okay, sorry about that. You see that the price tends to react at certain point. So if you look at 1 hour, you'll see that price reacted off at the fair value gap here, at the fair value gap, and tapped into the order block here. So let me tell you guys, gold usually moves based at the reaction at 3 main points. First of all, you'll see that gold tends to react off gold reaction points. So you'll see that gold tends to react off at either the fair value gap. So at number 1, we call it fair value gap, the FVG, and also at number 2, you'll say the order block, the OB, or the order block. Let me just write the whole name here, the order block, order block here. Yeah. Okay. And it will tend to react either at the breaker block, I think basically these are the main things that gold tend to react off mainly. But note that these zones here tend to act as a point of interest because, one, it must have an inducement or an area of liquidity. So let me write another one. Are you guys getting? Yeah. So this zone here, gold tend to react because it is a point of interest due to an area of liquidity, either the equal laws, it must have a liquidity area, it must have a liquidity area such as, let me just okay, inducement, also have the equal laws, also have either the buy side or the sell side liquidity, but rarely though. But I always look at the inducement equal lows, either the or the equal highs, equal highs, equal highs, the equal highs. Yeah. All right. Sorry about that. Or maybe the buy side or sell side liquidity. Yeah, these are the major points that I always look into before placing an entry or maybe a trade during at this region here, or the point of interest. So this point of interest are considered valid because of these things here, because of these things. So this point of interest are considered valid due to these things here. Yeah. So at the order block or the breaker block, we do have some things called, not some things, but generally some points called the demand and supply, or the support and resistance. But basically, trade it rarely, a rarely case do react at either support and resistance, but do usually react either if this either a support or a resistance. That zone must have a liquidity, or maybe it must sweep the region with the wick before reacting off either at the sell or the buy side direction. So yeah, basically I don't usually trade the support and resistance because most those zones are the areas of liquidity. So it's rare. In a rare case, it's a point whereby you can either lose or maybe you can be liquidated, or something called smart man trap. So after gold pumped or crashed at either 405 pips, you can see that it tracked off at this favorable gap, and this region here is a zone of a demand. You can see the price record here, consolidated, record here, consolidated, then break out. So after the breakout, you can see there's a retest and a trend continuation to the upward. So why did I consider this zone here as a valid POI? Why? You can see there was a liquidity resting here. You can see there's a liquidity resting here. This is called an inducement. It seems like the writings are kind of small. Let me just use this one. Inducement. So this is the area of liquidity. Why? The area must be swept. Is the area where the most institutional have placed their orders. Are you getting my people? Yeah. So this is basically call it a demand. But so this is the reason as to why the pair reacted off at this region. But I didn't take the entry at that point, so I switched into, from the 1 hour I looked into 15 minutes. No, from 5 minutes, because from the daily 1 hour 5 minutes. So 5 minutes, this is whereby I took my entry zones. Okay. So at first I want to take an entry here. So let me just remove this and show you what we did. Yeah, you can see the direction at this point here, but if you switch to the line chart, you will see the direction at the beta phase of it. So first of all, the MSR strategy, or the Malaysian support and resistance, you see that these act as a breakout. This is a breakout zone or the change of character or the breakout. That's why I call it BRQT. And also this is a zone of Quasimodo level or the QML. The QML. Yeah. Let's go back to the candle. You can see it clearly now? Yeah. So these are the zones or the point of interest for a valid entry. So you can see this is a demand zone here. It's a demand zone. It's a demand zone there. So price will tend to react at this point here. So this is an inducement. Let me just delete it so that I can draw it once again. So this is an area of inducement or the area of liquidity. You have seen, we have started from the higher time frame, the reaction point. Basically, price always tend to react at either the fair value gap or maybe either at the order block or maybe the demand zone or the supply zone, either at the buy side or the sell side zone. So you can see we started from the 1 hour, but basically we do start from the 4 hour. But 1 hour it's basically clear. You see what you can it can bring you down, or maybe the top down analysis. So in 5 minutes, this is why we will be taking our entry. So you see that there's an area of fair value gap here. First of all, there's an area of fair value gap here. Second of all, there's a change of character or the breakout here. And the MSR, these are QML or the zone of either of head and shoulder. So the QML is always valid. It's always something like this. So you'll see like this, and this, change of character, liquidity, any at this point. So this point here is always considered is always considered as the Quasimodo level, and it's always valid because it has an inducement. It must have an inducement before the sweep or the entry level at this point. So after the price broke to the upside, I was actually waiting for a reaction at this point here. I was actually waiting a reaction at this point here, before I take my buys entry. But likely enough, I missed this entry because the price didn't react back to the zone. But it will eventually come back to the zone before buying it. So you can see that pattern, it dropped massively. Yeah. So I'll show you what happened here. Yeah, so basically the price pumped to the upside. So you can see in 1 hour it's kind of bullish. You can see the trend is bullish. And also I'll say the second thing, the break of structure, and those who use SMC. But always trade with liquidity. Remember guys, always trade with liquidity. So this is a break of structure. After the break of structure, you can see there's two POIs. You can see this is the area of demand. No, it's always the sell candle So it should be this one, the whole of this one here. Or the support and resistance at this zone here. So you'll see that there's a liquidity resting at this point. And also there's this liquidity resting at this point here. So actually this move happened during the night, so I didn't actually take the move. So I was anticipating after this sweep of liquidity to take an entry at this point here, targeting the next high here at that line there. But for stop loss it was around there, so I was anticipating around there. So the price starts the POI and it's up liquidity first here. This one, it's called the smart money trap, before pumping upwards. After all, the market tend to crash again. So we'll see the 1 hour. So after the crash, the market then came back to the same point of POI at 1 hour zone here, but it didn't react off at this demand zone here. It never reacted off at that zone. So it reacted off at this fair value up here. So you look at the lower time frame, you'll see in 5 minutes, you see that the price after tapped at that zone. Remember guys, I don't take trades blindly. There must have a confirmation before taking an entry. So you see that at that fair value gap, there's also a key level here. There's also a key level at that point. Key level. It tracked off at this zone, swept the previous candle liquidity. Swept the previous candle liquidity, then tend to pump the upside. So once again we see to the line chart here, you see there's a breakout at this zone. See there's a breakout at this zone. The lower high breakout at that zone. We are right here. Then switch back to the candle. That's basically taking. Okay, there's also something else called the OCL for those who are new channel. I was targeting this liquidity sweep here, and then either the market react off at this zone, here, either here or maybe here. So maybe sweep this liquidity and react over that order block. But the market didn't reach here. So after this sweep of liquidity, I was actually waiting. So you can see this liquidity sweep here. and also the peak is called the apex. So guys, you can see that this trade here, you can see there's a favorable gap here, there's a breakout, and also if you look at the line candle, you can see this zone here, here. This is our demand zone. You can see after this favorable gap here, there was no any liquidity resting at this point here. So what the price did, the price started off at the breakout, at the change of character zone, then turned to pump out and came back to react off at this order block zone. I know you can't see. See that the 1 minute. Sometimes I use 1 minute for scalping on tree. Hope guys you can see it clearly now. This zone here. After change of character, price formed the liquidity. So this is a breakout here. Price formed the liquidity at this zone here, at this point here. Swept the liquidity. It's called the inducement. Swept the liquidity and reacted off at this zone. At this zone. So I was actually targeting 1:4 this point here, and then stop loss just here. But the market reversed. The market reversed upon me. Right. That was the second trade that we took. But this one I missed this trade. Took this one. So you can see the market tend to move to the downside. So this one here, if you stretch it towards here, it won't be the apex, it will be breakout structure, BRS. I don't know, I was actually wondering how did the market just change character like that. I was maybe anticipating maybe this was a liquidity grab here to pump the market upside and continue with the direction, but I don't understand though. I don't understand this market move. Yeah, so basically after the change of character, you see there's an order block here, there's a liquidity resting at this point here, and also there's a favorable gap at this point here. So the price maybe might come and react either with a wick and go back, or maybe react this point either as here, then just pump to the downside. Yeah, another time then price formed a breakout structure here, but this one was actually a liquidity. That was I saying this is a liquidity, so it served the liquidity. Here. The reason as to why I'm saying this is a liquidity is because you can see above it there's a favorable gap resting above it, which means this is a zone of pending orders that the market tend to fill at a given time. fill at any time, maybe when the market tend to react at that zone. But the market didn't react at that zone. It reacted off here. It reacted off the breaker block. You know, that's why it moved out. So you can't just enter because the market just traded off at that zone. You see that first of all it will form a change of character or maybe a breakout. After forming a change of character, you see that it will have a demand zone at this point here. That's why you can see after reaction at this point, here, the market then pumped out up to the downside. It formed a change of character. This one was a failed low. So this was considered as the smart money trap here, or the liquidity sweep to the buy side. Yeah. So after changing the character here, you can see there's a liquidity, and you can see I highlighted it out. You can see I highlight very keenly. I highlighted it out. You can see there's an inducement. So the price reacted off at this zone. Why? Why was this zone considered as a point of POR? Because there is a fair value gap at this point, there's a liquidity resting at this point, and also it stopped liquidity here. So there's no business going upside there because there's a after change of character, liquidity resting, then after reduction at that point the price targets the next point of fear or the next liquidity resting at that zone. Yeah. So after reaction at that zone, I can remember I sent this type of analysis to the group. So I will show you the group that I usually send the analysis. We usually meet with the people in my group, so feel free guys to DM me, and I will add you to the group so that I can be able to be profitable, like us here. So after the investment, we took a sniper entry at this point here. We took a sniper hint at this point here. So let me show you guys. So yeah, as you can see, this is my group, and feel free so that I can be able to add you to the group. Yeah. So what led us to that entry? You can see this was before. You can see there's a liquidity resting at this zone here. So I was targeting it to be swept before it pumped us. So you can see I add these as my entry model. So let me show you guys. This is why I pointed out. You see there was a change of character at this zone here. There's a liquidity sweep this zone, and this POI was considered a valid POI because it had a fair value gap after the change of the character, and it started off at this breaker block, or maybe the support, the break, or the break and retest of this zone. So a trade is considered, those who use SMC, a trade is considered valid. Why? Because after the change of character, the trade must build a liquidity resting zone so that the price may tend to sweep that liquidity at a given point so that you can be able to gain the momentum and pump the move either to the upside or the downside. So you can see after seeing the analysis here, let me show you. Our trade was, you can see, So I use trend line, you can see 1, 2, 3 as an influence for my entry. You know, in the trading industry, you must be smart. There are some confidence that you must have a wide range of eyes so that you can be able to see and be able to gain good skill or maybe a good insight when taking up the trade at a particular zone. So that was sniper. I know some guys will feel, I know it's okay. Can see how it pumped. So I closed the trade early because I thought it would react at this point here. It would react at this point here, or maybe at this point here. So I was waiting either this liquid to be swept before reacting at this point here. So let's continue, guys. That was 1:3 RR. So the price came to sell this liquidity, and this was the demand zone or area of interest, and there was a liquidity resting at this point. So you can see how it is. First of all, the trend of the market, liquidity build, change of character, favor lookup, sweep, entry. And trust me, guys, you can never fail with this strategy. So it actually reacted off at this zone here, then went upside. So I was actually targeting to enter at this point here, at the 50% encroachment area here. So me, I thought this was just a liquidity build before the price would pump to the upside. Yeah, the price again came back at this zone here, but we actually took a loss at this trade. I actually posted it on the group. You can see I was anticipating for the price to go up before selling again at this point here, because this is a zone of trainer liquidity, and also it's a zone of PR because there's a fair value gap at this point. But there's something that I missed. There was a fair value gap here. There was a fair value gap here. And also there was this liquidity zone here. I don't know why I wasn't sharp. I would have just taken this entry, a sniper entry, targeting this zone here. So after this sweep, it tracked off at the 5-minute supply zone here before pumping to the downside. So I was actually waiting for the price to react at this point here and maybe target either at 51, 55 here before either going down or maybe going up. Because as per now, no one knows where the price will tend to react. You can see this one's still clear. So after I saw there was a breakout here, there was a change of character. So this one I used 5 minutes, and then you can see here. I want to scalp this trade, but I ended up being the liquidity itself. So you can see there's a breakout. There's a breakout at 1 minute here, and also there's a liquidity resting at this zone here. So I was actually looking into this fair value gap here and reaction at this point here. So you can see the price tend to react off at this zone here, but it went up a little bit before sweeping me out. That was actually today. So let me show you the trades. After the reaction, yeah, you can see the people are anticipating more buys there, but we ended up being a liquidity. You can see this was before I didn't notice that the price already built and liquidity resting at this point, and it was already reacting off at this zone here. So that's how I missed the trade. So this was the entry. No, it's not opening. This was the entry. I waited for this price to sweep this liquidity before letting off at this zone here and targeting either at this 50.80 or maybe 51.110. But we ended up being stopped out. That's why we were stopped out. So let's go back. So for now I would have just taken this trade here. I would have just taken this trade here. So you can see the trade broke out this zone here. This zone here. So this was supposed to be an order block, so it broke out, treated as a breaker block. So I was anticipating the price to react off at this zone here, before pumping to the downside area. So as you can see, I usually use an indicator to point out the order block, because pointing out manually it's kind of tiresome for me. So just bear with me. So I usually use this indicator to show up the order block, so I can be able to know the point whereby the price will tend to react off at that zone. So this was a liquidity resting at this zone here. If you look at 15, you can see there's a fair value gap. So guys, you just play with the fair value gap, the liquidity, and the point of So this is the area of a supply zone here. This is a 50% encroachment. Can see after the sweep of liquidity. Okay, sorry about that. Inducement. After the sweep of liquidity, you can see there is a confirmation candle. It's called is it called the pin bar or the what? Pin bar or something there. So I was actually anticipating for the price to react off this breaker block here. This one was I considered as a liquidity here. This one was the OCL, or the open close candle. This one was my POI here, but eventually price didn't come back to that point there. So after reaction at that point, you can see, if you use the 1 minute, you will see it clearly. Change of character. You can see, though it's consolidating, it's not kind of healthy though, but at least try to gain something. So you can see there's a change of character. This is also the QML. The QML. So switch to the bar, the candle. You can see same thing. Nothing old here. This is a point of POI here, and this one also is liquidity. So it's swept. So you can see, guys, how it's so easy to interpret the gold market. That's why I've been so profitable for a long time. So you know how we do this thing. So use a different color so that you can be able to understand it more clearly. Okay, it's, so me personally, I'll wait for either. You can see it started off at this zone here, this supply zone here. So I'm waiting for the price to react off at this zone here, at this zone here. Stop loss just slightly above point of here, and so in the confirmation, I use the confirmation candlesticks such as the pin bar, the doji, and other more. So that's my confirmation. You can see right now there is a bullish pressure, but I won't enter for a sell right now because you wait for a confirmation. Either it can either break to the upside or maybe it can close the sun. So you tend to see this candle closing to show that the price volume has changed, or maybe it has diminished. So you can see at the 5 hours, 5 minutes, not 5 hours, sorry about that. You can see there's also a breakout this zone here. There's also a breakout at this zone here. A breakout at that zone here. And also there's a QML, or the Quasimodo level. QML. So we'll switch back to the bar chart. And also there's a liquidity. So maybe the price will react off at this zone, maybe break to the upside. So it may react at this zone here, going to the upwards. You can see there's a fair gap here, there's a liquidity resting here, and there's a breakout QML point of interest there. Yeah, so guys, that's what I'm anticipating. But from the higher time frame, that's just scalping. From the higher time frame, from the high time frame, I'm expecting for the price to react at this point here before going upwards. But as per now, I don't think if I will take a trade, because I can see the market is about to close. Maybe we'll start over at money because the losses have been too much to bear. Seems like the price tends to change character. Can see it, though it didn't track off at this demand zone here, but it tracked off at the fair value gap here. So the price tracked off at this fair value gap here from upwards. So this might be maybe the move might happen right now because of this week and also the next one. So if this candle closes bullish, forming either a hammer or maybe the direction candlestick to show that there's a formation of bulls in the market may tend to go up. So something like that. So guys, thank you for watching. Please again do more to subscribe, share, like the video so that I can be able to drop more content and also give you good knowledge and understanding based on my strategy that I usually use. and also be able to learn from me. And if you want to join my group, just do well to DM me, or maybe you can see this is my number here. Do well to DM me. This is my number here. This is my number here. Do well to DM me so that I can be able to add you in the group and able to learn from others. Alright guys, peace out. I can see there's one guy having the same view as me on gold. You can see they want to sell, and also me, I want to introduce right now. Just waiting for the confirmation. Alright. Subscribe once again. Please guys, do subscribe, and it will motivate me to drop more content and also more educational materials to gain knowledge from you guys. So, peace out.